Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in tonight's free video I wanted to review some ideas around Tesla. Now, of course, Tesla had a big day today, and when we were heading into the weekend we kind of had a suspicion that it might be getting ready for a move, but it's very hard to get positioned off of one dot squeezes. You can see that you had that there on the 78-minute chart, and if you come down into the 39 it was a little more pronounced. So the consolidation of that, the compression of price, compression can only last for so long until you're usually looking for a pop. It just came today in a big way. So I was kind of patient with it out of the gates, and then once it was able to clear some of the resistance that I was looking at back here, started to go ahead and get into a position, and that has closed pretty well for us. Now, as you get into tomorrow, and this is why hopefully this will be an interesting piece, because there are a lot of arguments that could be made to the long side in Tesla. I think that would be easy, and if you look to it and you say, okay, I want to buy a call, you don't necessarily need my advice to do it. That's a very basic way of getting long, but two maybe a little bit more thoughtful ways of doing it are something that I wanted to show you here and here, because the first chart shows that a previous swing high to a major swing low does take us into a 1272 extension right at the $300 level. So I'm kind of thinking, okay, is Tesla going to pause at this level and kind of consolidate around 300, or is it just going to keep ripping higher? There are two ways to try and take advantage of this, and they lend themselves to both basic and more advanced option strategies. The first that I was going to share is just looking at the basic idea of buying a call debit spread. Because when you look at the idea of saying, hey, maybe we buy the 295 and then sell the 300, well, selling the 300 will work out well for you if this extension ends up holding tight, but you're still bullish. Now, it's a little expensive, sitting at about a 1-to-1 risk-reward ratio, but look at the idea that, let's say you pay $260 for this call debit spread. Well, that means that your break-even price is $2 lower than where we're currently trading. So if the underlying moves higher or marks time, it's a really good way of getting some exposure to it. Like I said, the spread's a little bit pricey, but it does give you some nice decay. Now, another way, if you want to look at it a little bit more advanced, but something that I still think will give you some interesting bullish exposure, I like the idea of a 5-wide unbalanced fly. Now, I'm using this via puts because this is a spot where if we were able to do something, and of course a lot of this will depend on where it opens up tomorrow, admittedly, but if you're able to do something like it opens up down a touch, and you could get this 5-wide for $1.50, it's a really interesting way to get yourself some exposure, because if it keeps ripping higher, you make $1.50. If instead we get into the end of the week and it decides that it is going to pin at that level, that could be a really attractive spread. If all of that is completely wrong and Tesla just rolls over and dies, you have $350 of risk in each of those. So there again, if you want to just play it real basic and buy it, that's fine. If you want to look at kind of a conservative vertical, we've looked at that. And then I think these butterflies also have merit for those of you that want to look at those. So I hope you find that helpful. Have a great rest of your evening, and we'll talk to you again at the next free video.